Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Drew Meredith from Wattle Partners. How you going, mate?
Pretty good. Yourself?
Pretty good. Yeah, it's been a day of recordings for me. I spoke to Lindsay Partridge, the CEO of Brickworks, earlier today. It was a really good conversation. So that will be out in a few weeks.
Had a good report last week.
Yeah. It seems pretty consistent with them. You know, they're not a rapid growth company like maybe we talk about a lot on here, but they are a business that's just kind of steady as she goes. You had a call earlier on the week, or was it today?
Wednesday. It seems like a long time ago. It was yesterday. I think you've had Cameron Brownjohn from Federation on your podcast before.
Yeah.
Good bit of an introduction to the private equity and renewable energy space, and provide an update on some of those big holdings he's got, including Plenty, which listed last week.
Yeah, saw that.
Sendle, which is growing quickly.
Yeah, I think I mentioned this. I don't know if I mentioned this to you last week, but Sendle, some people I know have started using Sendle as kind of like their preferred service to send packages and what have you. Yeah. And I never heard of it until I spoke to Cameron. So really interesting guy. And that's part of the new series, right?
Yeah, every week until Christmas, which sounds tiring.
Every week you get a bit more tired when you say that.
Yeah, well, we found our clients see a line in their portfolio, a name, and they don't always understand the work that goes behind the name. So we're trying to introduce all those people and doing it in a 3-month period. Put it all in before we get forced back into the office.
Yeah, and then you've actually got to talk to people and do all the rest of it. So people should know, this has been really popular, these videos that we've been doing every week. What we're going to do going forward is we're going to change these because Drew's already doing the weekly insights where he's speaking to fund managers. I'm hosting the Australian Investors Podcast and co-hosting the Australian Finance Podcast. So what we're going to do is we're going to roll these videos and discussions into the Australian Investors Podcast. And then Drew and I will catch up every second week. So then you can go and listen to Drew's podcast, or you can continue to listen to the Australian Investors Podcast. And then that way you get the best of both worlds. Drew and I still together, 2 really good channels to listen to. And then it gives us a chance to actually sit down and talk a bit more in depth about the different companies and opportunities. Because I don't know about you, mate, but doing 3 interviews a week when I'm trying to do all this investment research and run a business, it's pretty tiring.
I'm a bit of a note taker as well. So every one of these things, I've got 50 questions when I might ask 5. Good due diligence. So
yeah, that's it. And this is the thing. Like, we want to make sure we're adding value to all the viewers. So we want to keep it real high quality. It'll still be available on YouTube. We'll still share it in the emails. We'll still share on social media. It'll just be every second week, and then the other weeks you've got another piece of content. The Investors Podcast will still be every week. Your interviews are still going to be every week. So there's plenty for people to go on. But hey, let's get to the exciting stuff, Drew. We've got some companies to talk about. We just thought, there's a company that has an interesting history between our portfolios. I told you before, the service that I run where I release our research, or where our team releases our research to members, in the history of this service, so since 2018, it seems like a lifetime ago, there has only ever been 2 sold positions. One of them is the Trade Desk, which you just told me before is probably a 5-bagger for you, or somewhere around that region.
It's a never sell for me.
It's a never sell, and I sold it. So this is going to be an interesting discussion. But before we get to that, to kind of set the scene on this big opportunity, we've talked about thematics or just themes in general and sectors of interest in the past. But one of the things that we want to talk about is digital advertising. Digital advertising obviously being the newer version of advertising generally, which is where you see that guy out in the street with a sign, twiddling around on his finger. That's a form of advertising, to a billboard, to when you go to the cinemas. It's all around us. But the thing about traditional advertising is very hard to get attribution. It's very hard to get an exact answer for how much of a return did I get for spending that $500 on advertising. Because in the past, it's been this one-to-many approach. If you drive down the freeway, you see an advertisement for a health insurer. Was that effective? Who knows? I don't stop and read the health insurance ads. But companies would spend a lot of money on that. And the marketing team would want an answer to say, how much of a return did that make, that billboard? But no one could really answer that. And now the problem with that is because it was that one-to-many. You'd have one advertiser to many viewers. Now, with a digital medium, it's one-to-one. So, we know about Google, we know about Facebook tracking you through the internet. But that means that they can serve targeted ads. If I go on and I'm looking for a new camera or a new microphone, Google's going to know that that was in my search history, and then they can put that in front of me when I go and read about finance on Bloomberg or something like that.
Follows you everywhere.
That's it. And it's not just doing that for me or you. It's doing it for billions of people. And that's what makes it so effective. So that's kind of digital advertising. There are many different ways to play it. Drew, you want me to fire off some numbers? So let's just have a look here. The global advertising market, according to Statista, is $520 billion US. They say it's down 9% on 2020. So this is the year ahead. And it's in the largest market is the United States. No surprise there. But if we go to just digital advertising, this is where it starts to get really interesting, because this is where the industry is transitioning. Obviously, in a COVID environment around the world, not many people are spending on traditional advertising because there's no one seeing it. So the ad market in digital ads on the internet, video, etc., which we'll get to, is $355 billion. So that's a big, big chunk of that, 500 plus billion. And what's really interesting is that search advertising is projected to make up 160 billion of that, so traditional ads, and the industry as a whole is expected to get to $500 billion in around about 2024. The last stat I'll throw at you, Drew, is that in Australia, the average internet user, for the average internet user, the average ad spend on that user is $370 US. So for every you and me out there, Drew, there's $370 overheads US that is spent on marketing to us through a digital means. So that's that. Why do we like the digital ad space, mate?
Well, I was looking at Nick Griffins from Munro was doing a presentation when he picked Trade Desk as his stock of last year. And there was a really interesting stat on there that I found, which was that in 2010, digital advertising made up just something like 10% of all advertising. In less than 10 years, at 50%. And he's expecting it will be 100. All advertising will be digital at some point in the next 10 or 20 years. And that's just, as they say, you look, and as we've said in the past, you look for themes that are growing quicker than the economy itself. And there are many themes within this theme that are growing quickly, as you were talking about before, whether it's videos, whether it's not Netflix, but other connected TV applications as well. It's just incredible. Some of the examples before, it's like you can pay $30,000 or $40,000 to get a half page ad in a newspaper. You never know who's read it. You pay $15 and you can see who clicked on your ad on Google. And similar to Super Bowl commercials, I Googled that before, and that's $5.2 million for something like 30 seconds. Imagine how much you could specifically target an 18 to 34-year-old that likes watching The Bachelor, as you said, and target them perfectly, and you'd spend far less than that. Incredibly interesting.
Yeah, and this is the thing, right? Like, it's more transparency for the most part. It's more transparency for the advertiser, but it's also created some businesses in the digital space, because when you combine that kind of that growth with the transparency, and you get some really good software companies underlying all this that make these opportunities possible and can do it at scale, it creates unbelievable opportunities for investors who are willing to back these companies and hold for a long period of time. And so traditionally, the two companies that we'll kind of mention at the top of the show here are Facebook and Google. They gobble up almost all of the share. Well, not all of it, but it's the vast majority. Some reports would be 75% plus of digital ad spend in the developed markets, probably excluding China. And the reason for that is pretty simple. Everyone Googles for something, so the ads that get shown in that first 3 or 4 results, someone's paid to have that there based on that keyword. If you go on Facebook, the tremendous thing about Facebook from an investor's point of view and from an advertiser's point of view is that many years ago, people were putting in their date of birth, where they spent their last 10 minutes, what their favorite chicken burger is and where it comes from. you could get pretty much everything. And then advertisers could use that and target specific regions. I'll give you a really good example, Drew. A member of our team who may or may not advertise, who may or may not edit this podcast, so I should be careful with what I say. He used, in a former life, he used Instagram, which is owned by Facebook. He used Instagram to target a specific address of some potential clients or potential associates, if you like. And so he could target the physical address because he knew their building and put the ad deliberately in front of them. They didn't cost him the earth because he was very targeted with his ads, which meant that it was a better return on his investment. Yeah. And so that type of thing, you just can't do in the past. I mean, you could go and put a billboard up outside their window, but it probably wouldn't be super effective and it'd get taken down. But this is the opportunity for software companies. I own Facebook shares. I own Google shares, full disclosure. I think Facebook is probably the weaker of the two, in my opinion, just with the kind of cycle off that main core platform.
And the kind of regulatory issues coming through, given the news platform.
Yeah, and particularly in an election year, there's a lot of uncertainty with that.
Numbers like I was reading earlier today that everyone's kind of hopeful of Google and Facebook in lead up to Christmas, but something like 50% of people searching for a present just go straight to Google. 33% go to Amazon, and maybe like 3% go to Bing or some of those other ones.
I got to say, as a Google shareholder, so take this with a pinch of salt, but I was trying to use Bing the other day and I searched for something. The whole search results, the whole page was just ads.
Yeah.
And because it says ad in the top corner. So
it costs people when you press the button too. So it's
it's almost like just click on it. If it's a competitor, if you just click on it, just spot them.
No, don't do that.
No, but it's a pretty amazing industry. And I think what you get with Facebook and with Google, in my opinion, particularly with Google, is the optionality. So Google's got that core search business where everything you search, yes, it sends a volt of electricity back to the Google servers, but then it serves you ads, which they benefit from. And it's effectively free money. So this is like one of these businesses that is free money. They created the marketplace, the advertiser pays, and the website that, ultimately gets the click, they pay, and it
can't really be broken. The monopoly there.
It's just, unless they really break the user experience and maybe even regulation could damage it, but it's probably not breakable. Yeah. And that's the thing. But there is potential, and this is an interesting one that it's funny that you brought up Amazon, which is a whole another thing for next time. But I think the way that people are served ads and the way that we search for products is going to change. So already we know that over 20% of search requests going through Google or the big players are voice activated requests. So how do ads get served in that environment? Well, it's pretty straightforward. They would serve you an ad when you go, hey, okay, Google, what do you think of whatever? But I think the big one here is Amazon.
So Alexa sitting in your...
Yeah. And I think, are you an Amazon Prime member? I think we talked about this a few weeks ago.
No, I got it free, and then everything comes so quickly, I don't need it yet. I think it's a bit different in America, where basically you can get something in 6 hours, whereas in Australia, regardless of your priority or not, you still get it in a day or two.
Yeah. And that's the thing. It's probably not to that extent. Yeah, I am a Prime member because I have the Prime Video subscription, and I pretty much get it for nothing. So I use it, and I do notice that it comes very quick when I have priority packaging. But what's really powerful about this, I think, and this is where it could shift in time. So this is as a Google shareholder, or Alphabet shareholder, I should say, this is something that I'm actively monitoring. Does that, you said it was 32% of people go direct to Amazon?
Yeah.
Yeah. So does that become 50%, or does that become 60%? Because there's no need to go to Google anymore because you're going to get the product on Amazon. That's
beyond
kind
the
of
middleman.
That's it. Yeah, let's just cut out the middleman. I'm a member of Prime. I get it for free, like delivery. Let's just go and do it. So does that change? I think that has a bigger impact on some of the product providers because the power is going to keep shifting towards Amazon rather than your Procter & Gamble's and your Johnson & Johnson.
Google's a bit more democratized slightly than Amazon is.
Yeah, we've heard some rumors about that. Like, we can't really comment on them, but they're effectively rumors that, how do products get placed in a marketplace? And, I think the great thing about these tech giants is that they delight their customers. So it's very hard to make that political fight.
You keep delivering.
That's it. If Google did charge users or whatever, they'd probably find it a lot more difficult. But because the politicians really have nothing to stand on other than the people that create products, it becomes very difficult. We are seeing a bit of that knockback in Australia. But hey, that's Google and that's Facebook. And the reason why people buy those shares is because they want exposure to this thematic, because it is growing quickly and they've got the most upside, arguably, in terms of absolute numbers.
But revenue did fall a little bit this year. Was it down about 2%? And Google search is what, just over half of all revenue.
Yeah, and to be honest, you could probably say that Google search business is quite mature. So they're looking at things like subscriptions for Google Drive, and we've covered cloud computing and all that type of stuff before. There's many other ways, YouTube, many other ways to monetize, but that core search business is extremely profitable, but it's probably a bit more mature. But
it is expanding overseas though. So it's, what is it? US is about half. Europe and Asia are growing pretty quickly as the internet and sort of smartphones and everything keep expanding.
Oh yeah, then you've got Latin America, different parts of Asia as well. So it's definitely, like, I'm not saying it's a mature, like, you're not going to get the GFC style numbers where the economy was going backwards rapidly, but Google was just trouncing everyone in terms of top line numbers. But I think most people kind of stop there. They get to, the advertising market, it's going to be huge. Digital ads, let's buy Facebook, let's buy Google, let's buy Amazon. But there is about 25% of the market, and what I mean by market is probably eyeballs that aren't on those platforms that deserve to be served ads. And the way they get served ads is getting more creative. And one of the companies is Trade Desk. So I'll hand it over to you, mate, and explain a bit about what the Trade Desk does.
Hopefully it turns me into a millionaire. It's in my super fund, so no capital gains tax there. Hopefully I will sell it when I retire. I don't ever want to sell it.
Yeah.
Basically, it's become, they call it programmatic advertising. So basically, you can, as you were saying, you can target individual people in all different demographics, and Trade Desk works as almost like a broking house where they sit between someone who wants to advertise and the groups who run the ads. So that could be Facebook and Google. They're not necessarily competing. We said before they are slightly, but such a small part of their business is in competition, and they're just streamlining it for small, medium, big size businesses to target their advertising and get, as we said at the start, real-time results on what they're on everything they're paying for. Are people clicking it? Are they getting, splitting it up into the individual age groups? And it's incredibly kind of exciting business when you start going into detail. I went to a bit of a wormhole last night. They're talking about, so the big growth area for them is connected TV. So everyone's going off free to air, which means, advertising, you said it before, advertising money follows eyeballs. So if no one's watching free to air and you don't know what leads you're getting, everyone's going to Netflix, or they're going to Amazon Prime or Disney Plus, and you're actually able, YouTube's another example, you're actually able to tailor ads even in live sport that are suited to the individual person. So I'm not 18 to 34 anymore. I'm 34 plus. So in that group, maybe I'll be targeted some sort of
retirement product.
Retirement product, or something for a child. That might work. And you'll be targeted something, like a holiday or some fancy new drink. But the ability to specifically target that person, and it's not just TV. That TV for them, whilst the rest of the business is pretty slow, because as you can appreciate, people are spending less money in a difficult environment for a short period. They're also on platforms like Spotify and SoundClouds, as well as within all the different apps, or a lot of the different apps on your mobile. So what we look for is a growing market in a growing sector, and the sector is growing incredibly quickly, and connected TV is only a small part of their business, but growing even faster than the sector it is.
And that's the thing, right? Like it's podcasts, it's streaming services, it's all that. How do advertisers reach those markets? Like podcasts are going crazy, or they have gone for about the last 5 years, and advertisers are only still waking up to them now. And Trade Desk is already there serving ads. And what we mean by programmatic advertising is, like, anyone, like Drew and I could jump on Google AdWords and we could put an ad in and we could go, bang, we'll put that word there and we want it to be served at this time. What we mean by programmatic is, in basically the time it takes for a web page to load, it's decided what ad it wants to serve you, and it pulls the ad across from a server and puts that on the web page in front of you. It's the same thing in real time, like you said. Same thing with advertising on a podcast or a video. It can decide literally in less than a second, milliseconds is how they count these things, how long it takes to get that ad in front of you. And this is what's powerful about it. It's 100% programmatic, so it's transparent. There's no, kind of middleman kind of washing over the results. It will tell you straight away. And you also touched on a point there, Drew, about advertising in general, and I think this is more so with digital ads now. When we originally made the buy rec on Trade Desk way back in the day, it seems now, what I said was, don't get too fixated on kind of the cyclicality of the advertising market, because what these businesses do is not necessarily correlated to how much ads are going in the market. Because and I know, if you invest $100 and you get $150 back, you're going to keep investing $100 for every opportunity there is. So with these big marketplaces like Facebook, Google, and Trade Desk being able to serve into different marketplaces itself, there's always a customer. And so even though revenue dips, it's that structural growth that you should be focusing on.
People being forced to be better with their money as well. With their, ad spends, they're not going to grow as much as they did, at least for the next 12 months or so. So you want better value for money, and you want to target a bit more. I saw stats in their quarterly report where that weekly streaming minutes, sounds like big numbers, were up to 142 billion just mid and post-pandemic from 81 billion the year before. So it's almost a doubling. Yeah, everyone's stuck at home, and we probably will be for a while. But I think once you, it's like a taste it and see. So once you see it, once you try it out and you find out the value, then something like 95% of their clients are recurring. They never once they start using it, they never go away.
Well, they're the best.
And they make a profit.
Yeah. Well, so there's that I can't remember I'm going to forget it right now that we're talking about it, but there's a relationship that goes between R&D, so how much you invest back in to your business, and profitability, and it's kind of like this perfect relationship that they've kind of mapped in Silicon Valley, and Trade Desk sits right on that line. It's like the perfect type of profitability with the right level of growth and reinvestment, and I think that comes back to the founder. He's not new to this. We're just looking at the actual year that he founded it. It was 2009, I believe. But he'd founded businesses in the past that were since sold into Microsoft. And, still highly aligned, still really, really talented, because this is a business that isn't just, run-of-the-mill advertising business. This is a hardcore software business that I think the stat was something along the lines of every second, the Trade Desk uses more computing power than the NASDAQ, the New York Stock Exchange, and Google search combined. And that's how powerful this thing is. And that's because it needs to be. It needs to serve in real time, and it's calculating all different variables. And I think all of this, it's a very high quality business is what I mean to say.
Yes, all their expenses are in staff and constantly reinvesting, low debt. But they actually they had earnings of, I think it was 25 million, which is pretty rare for it looks like they're beyond the bottom of the J curve, which is that kind of exponential growth that comes from these tech companies. And it's rare to get a profit. I don't think they're aiming for a profit, but it's always good.
Yep.
I think the issue, not the issue, but these companies just have to constantly invest, like Google does, and pivot. So I'm not sure they thought connected TV was going to be the core part of their business 5 years ago. But times have changed incredibly fast.
It's just one of those businesses where it is, I guess, at the pointiest end of growth that you can get. So if you are investing in a business like this, you've got to be prepared that there are going to be times when things can seem pretty scary and there's going to be a lot of volatility. So I sold shares, and it's my biggest regret that I've made since I've been running the research service for our members. I sold the shares because I was concerned about the working capital position of the business. So what I mean by that is, if you actually dig into the fine print in Trade Desk's annual reports, what you'll find is that so the advertiser is someone that like say like McDonald's is a good example. They will pay an ad agency who then uses Trade Desk. But if the ad agency in between goes kaput, then it could be in my interpretation of it, could have been very difficult for Trade Desk to get the the recourse back to that original advertiser.
So they still owe Google, but they could
still
maybe not get that money.
Exactly. So I was very concerned about that, and I saw this trade payables balance building coming into coronavirus, and I was thinking, for avoidance of doubt, I should probably, and just to be on the safe side, probably get out of this. And boy, was that a mistake, because then everyone just went to digital advertising. So
and it did go down to something like $170 during March.
I think I sold it.
There you were right.
No, I sold it 190. So, and now it's what,
520.
So a few months later. Great.
It is fast. Yeah, it's fast growing. It dropped from it probably halved during the sell-off in March, and you're going to see these bouts of volatility. You're not buying a deep value stock that'll recover. This is one that's growing quickly. It's going to be volatile. It's going to need more capital at different times. It's but a $22 billion company now. And
you've got to pay up for it. That's the thing. So it's one of those ones, if you take a small bite of a portfolio, that's okay. Don't go into it all guns blazing, because it might be, you never know what's coming up next month. So particularly with the election and that type of thing, which, by the way, I did tune in for, Drew.
Don't get me started on that.
There was no connected TV ads on that one, but I think maybe we'll do another episode in a couple of weeks. Maybe we'll talk about different ways to play the whoever wins in the US.
I'm putting an article together on that at the moment, so
cool. That'll be perfect then.
Share that around before our chat.
Sounds good. There is I guess a question that I often receive, and it's a fair question. It's, well, if we're all using the internet and it's such a big deal with digital advertising, is there any way to play it locally so to not have to invest and get your international share account and whatever? I think it's better to go direct personally, but there are some Australian businesses that are involved in advertising, which is probably a conversation again for another time. But there is one company which is quite popular on the ASX. It's not a digital advertising business per se, but it's just an advertising business which we thought we'd give some lip service to, which is Media.
Yeah.
Out-of-home advertising. Drew, can you just explain what it does?
Yeah, I thought the name was like a sexy name, but it just stands for out of home. When there's an exclamation point in a stock name, you kind of get excited. They've had a difficult time because basically everywhere you go outside of your home, which we're not allowed to do at the moment, is where they advertise. So that's, at train stations, if you've been to Parliament Station, there's digital signs always flicking over as you wait.
In Melbourne. Yep.
Yeah. Bus stops, you'll see the JC Dassault's another one. That's I think a French company. Yeah, it should be French. I should know that. But they're one of the competitors. So bus signs, big billboards, and actually some of the interactive billboards within shopping centres. So you can go up and click on them, and so it does kind of creep into that digital advertising space where you have some cartoon character that your children then go up to, and then they want to go to the store. So it's kind of giving you no privacy anywhere. So it's out of home. It's had a shocker. They had to raise capital just to keep the lights on and keep the bankers away. Basically every part of their business is down at least 40%. Airport advertising is down 86%. Road advertising is down 50%. So it's been very difficult, but it's highly leveraged to a recovery. New Zealand operations are already back to 80%. So
that was reassuring in the result. Yeah,
they do know that people will advertise once we're back on the trains. We've seen everywhere else in Australia we get a bit negative in Victoria, but they do need to advertise again. Cut their dividend, raise capital, got rid of the concerns about. They had a pretty big bounce, I think, on the announcement. They got rid of concerns that they were going to run out of money. Revenue was only down 33%, but that really only covers the last 3 months of the year. Profit fell almost was down 300% to only 23 million. Dividend was cut, or that you kind of expect.
Yeah.
But it offers. It's kind of you talk about mining service companies when you're trying to get an leveraged exposure to the mining sector. It kind of gives you that exposure to either a vaccine or just a return to normal travel. Kind of agree with that.
Yeah, it's one of those ones. It's like that old value investor's dilemma, right? Because this is the type of business that bounces off the bottom, right? The others will probably just recover, but this is the type of thing that could bounce, the V shape, if you like. And I think what was really interesting to me when I read this result was that the New Zealand market recovered very, very quickly.
Yeah.
And that kind of caught me off guard because I thought, this thing's dead in the water. You know, it's got debt. What is it actually offering? There's this other product that's so much better, online, digital ads, it's transparent. But this is actually a pretty decent business considering the industry that it's in and how tough it's been. I don't really like the debt, but if it does bounce off the bottom, you know, this is one for the risk seekers and the thrill seekers, I guess. But
the ads do stand out. So that, like a digital ad on a billboard on Punt Road in Melbourne, when that changes, it's actually interesting. I started watching a TV show because I saw it on there. Signed up to Stan. Yellowstone was up there. That looked interesting, but it actually the fact that it's not just a basic billboard anymore, that it actually changes seems to, it kind of excites me. I'm still a value investor at heart, I think.
Yeah, but this is the thing, right? I probably am less inclined to go down this kind of type of investment, but if I was, then it would be a smaller position of the portfolio. And you know, we're always looking for these. I think the thing that investors often forget is that businesses are dynamic. They're not just set in stone and then it's kind of, that's the end of it. They actually respond to things. They make changes. When things get really bad, they tend to make bold decisions that are actually good decisions. And so this could be an instance where if you are looking to position yourself because you do think that there's a return to normal on the horizon, which to be honest in Australia might not be that far away. Yeah. If that's the case, then this is probably something that's on your watch list right about now. Do you own shares?
Not in this, no. Trade Desk, yes. I'll keep reminding you of that one.
Just go into the office and there'll be a big Trade Desk sign. No, so this is an interesting business. It's an Australian way to play recovery in advertising. It's not just, you know, one of those old glue up posters that go around the place. It's actually a business that does innovate. So interesting business to consider. There are others on the ASX. We'll take your requests if you have one. Drew, I think that's we said it was going to be quick, and here we are. Mate,
I hear my son crying.
I can't hear it yet. But mate, people can go and listen to your podcast. We're getting it on iTunes. We'll put a link in the show notes. Then we'll be back in 2 weeks to talk maybe something like the election and different ways to play it, maybe something a bit more interesting, we'll see. And then, you can always find out more about Drew by just going into the show notes. You can email you from the Wattle Partners website, right?
Yeah, exactly.
Yeah, cool.
Drew at Wattle Partners.
Oh, jeez, you just gave it out publicly. You get a good spam filter.
Always.
No, great, mate.
Every question's welcome.
Yeah, great. Okay. And so you've got it there. Reach out to Drew. Loves to chat, obviously. So, mate, as always, thanks for joining me.
Thank you. Have a good weekend.
You too.